I would just like to make a comment in support of Kumiko-san's excellent presentation about Japan, because I think it can really be a case study for us in the tax justice community, because Japan is a perfect example of a country with very high tax rates, both corporate, individual, and VAT, which is almost double the US tax rates. It has a non-aggressive tax culture. In other words, companies are not pushing for aggressive tax positions. It is a very stable society with minimal crime rate and minimal inequality. It has amazing safety nets in everybody having an option for an education at the public expense and free, almost free healthcare. So I think the model that Kumiko-san has presented, and which was validated by my experience in Japan for 23 years, working as a partner with PwC, I had unceasing respect for what a country can achieve if they continue to keep the tax rate at a level that is reasonable, and in Japan it is high, and still provide all the safety nets without creating an egregious culture of aggressiveness to counter it. And I think if I'm so glad you are participating in this conference, Kumiko-san, because I think we in TJN can learn a lot from the Japanese experience, because in a way that can be a model for all of us. In fact, my biggest problem as a partner in Japan was the constant pressure for aggressive positions by American and British companies for their expatriates on what they could or could not do. And after a while, I had to lose clients. I got tired of saying no, and got a reputation as somebody who was very difficult in dealing with this. But I still needed to do it even more so because I was operating in a society that had a culture of compliance and culture of respect for the revenue that is due to the government, as a result of which they can provide an excellent safety net for all its citizens without exception. So I want to thank you for what you've done and point out to our group what an example your country is to all of us.
Thank you
very much. Hi, it's a question for Kumiko as well. Your demonstration of how lobbying was done was very clear. What I'm less clear about is what have they achieved at the end? Is there any evidence that some of the key demand they were asking has been finally given at the end? I mean, is there any evidence that they went somewhere at the end and achieved something?
Well, thank you very much for your question. And that point on to what extent the Japanese lobby successfully affected to the result is not so much focus on my research, unfortunately, because it will need further analysis of the comparative analysis. But at least through my interviews or reading some resources in public, in online, that they're very keen to set their prior actions, especially on CBCR, via BIAC, that based on the recognitions that BIAC or other Western companies is not necessarily represented those concerns. So they just tried to set their concerns into the BX agenda. But the proof will be much more needed with those comparative analysis. So I would like to request each of you to those comparative analysis for further research.
Okay. Can I do two on the Slido and come back to you? So, one to Amedeo. Does the OECD achieve the results to create a tax network useful to all countries, including developing countries? Should the UN have a greater role? And after that, to Saskia. Should TJN go further in framing tax wars or laws? Tax wars as deliberate actions, okay, to undermine the national tax sovereignty of less powerful state parties. So Amedeo first.
So thank you for the very interesting question. I believe that in general, every effort in combating harmful tax avoidance is absolutely appreciated. And generally, the point of the UN is very interesting because it's true that the involvement of the countries is major in that case. The point of the paper, though, is still to enlarge, not only to remain to the intergovernmental cooperation, but to enlarge also to the epistemic communities. So not stick to OECD or UN, but enlarge the debate to all the communities that can improve this, that can improve the dialogue and that can give us contribution and ideas that I think that Saskia really showed us how that this can be done.
I guess there's two parts of this question. The first, I'd argue, is that I think as far as my understanding goes, the current global tax governance system does affect lower income countries to a greater magnitude than it does higher income countries. So in that regard, it does undermine the national tax sovereignty of less powerful states more strongly than it does the others. But as for framing it as something deliberate, I think that's up for debate. But certainly the fact that we don't have a system that sets a minimal corporate tax rate, sort of like a multilateral agreement, is extremely damaging. And the refusal of states to consider it is, I would say, like, well, you could describe that as a deliberate action to undermine national tax sovereignty. So yeah, maybe I'll go with a yes for that one.
Does it work now? Okay. Yeah. I forgot to. So I'm Lauri Schneider from University of Helsinki. Thank you very much for the interesting presentation. My question goes to Kumiko about the Japanese tax system. In Finland, 2 years ago, there was a discussion over this kind of specific case about a Japanese corporation that had a subsidiary in Finland, and it was sold by a Finnish holding company. Usually this kind of capital gains from this kind of sales are tax exempt in Finland, but everyone was surprised that the company paid like 700 million of tax for the profits in Finland. And it was supposed that the reason was actually the Japanese controlled foreign company rules. So if the Finnish company hadn't paid tax for the capital gains, the Japanese controlled foreign company rules would have been applied to the sale, and they would have paid even more tax since the tax rate in Japan was higher. In this case, kind of the Japanese controlled foreign company rules made aggressive tax planning unuseful for Japanese corporations. So maybe this might be, what do you think, is this the reason why probably the Japanese corporations, do I understand the controlled foreign company rule in Japan correctly, and is this the reason? And I think this is a very important question since the OECD, the new recommendations for digital taxation, one of the proposals is based on actually this minimal tax rules, which is based on controlled foreign company rules. rules. So this might be one way of actually tackling if each country had this effective controlled foreign company rules, it would tackle actually the tax avoidance everywhere. It might work in Japan.
Thank you very much for your comments and questions. But I'm sorry that I don't have not so much on the specific rules on CFC rules. But I assume that basic concerns of Japanese business and Japanese institution rules is based on the fears that Japanese business tends to be targeted by the more aggressive tax planning by the Western or other countries' business. So basically, Japan and Japanese business is keen to establish, even in the BEPS project, to establish the rules for preventing double taxation. So they don't have kind of effective rules or strategies to survive international competitive tax markets. So I'm not sure my answer is useful for you, but I would love to hear about the story in details from you. But the basic lines of the Japan and Japanese business is just stick to the further prevention for the double taxation.
Kumiko, just a question. So on the one hand, I mean, Christian's point about we can learn a lot from Japan's, domestic tax policy. On the other hand, you were also saying the reason why they're investing a lot in China is partly because they are taking refuge in China. They're trying to use Chinese laws to reduce exposure to competitors and also tax. So the two things don't seem to, so their behavior in the country and their behavior externally are different. So where do we square the brackets in that? And then my second question with that was also, what can we learn from the way that the association, CADA, ran? How they managed to successfully, basically, in multiple ways, influence the BEPS negotiation. What lesson does it teach the tax community? What could we do better? How can we learn from that?
Thanks, Charles. On the first point, I totally agree with your opinions that there are huge gaps in their behaviors in the domestic and the foreign subsidiaries. And that is what we have to tackle on to ask for, to reform for further improvements of their behaviors. And I'm not sure it is relevant that all I know is that on the activities in Chinese markets, they're just afraid of that double taxation, unreasonable taxation are there, getting more and more severely. And I'm not sure it is true, but they recognize that it is partly because of the local Chinese authority is motivated by the achievements, pursuing the achievement of their quota. So they just feel that it is unreasonable. So that kind of the behaviors is so much motivations of the Japanese companies. But it is not to behave So I think it is not fair that just doing criticizing Chinese markets, whereas they just only protecting their own profits. So I'm not sure what the solutions to small to decrease those gaps, but at least we have to recognize that those kinds of feelings or sentiments are there among Japanese business. And on the second point is on the lessons learned from the Japanese business. And it is very tough questions, but for them, it is a kind of successful story that finally Japan come to the stage of, level playing field of international negotiations, because Japan is often criticized that they just do what the US do. So, but to improve situations, ironically, the situation is going bad, I think. So we have to find some more constructive ways of solutions to, to find the balance that to achieve the appearance of Japan in international negotiations, but it must be much more fairer negotiation and results for further international global tax justice.
Charles, if I can add to the, sorry, very good reply. If I can just add to your question about how we square the two. I think in answer to your question, Charles, about what can we learn, the fact is that Japan's tax rules are principle-based and not necessarily rules-based on every circumstance. The spirit of the law in terms of what is intended here on any transaction is outlined in a very precise way rather than the details as to the implementation. I'll give you an example. The reason why Japanese companies don't extensively use tax havens is because the law says if you are in a low or no tax jurisdiction, you have to establish why having a subsidiary there is necessary if the work can be done at the headquarters in Japan. Unless you have moved physically the management of the company, unless you have sales and distribution centers over there, unless you have substantial bona fide presence, only then will we allow it. Otherwise, we will not. So most Japanese companies cannot meet that in principle requirement, and therefore they are very hesitant to use it because it would be disallowed. So as a result, the use by Japanese companies of these tax havens is minimal because it goes against the principle that is outlined in the Japanese rules. Now, if you look at the American tax code and the American regulations, you compare it to the Japanese tax code and the regulations, they're much less extensive. It's partly because of the principle base. That's my reading. Others may have a different view. The China question, I would say, my experience with that was that the Chinese tax authorities were very aggressive in going after all kinds of companies, whether American, British, Japanese, or others. So Japanese companies had to be quite defensive in their tax postures in those countries, and they were using extensively lawyers and accounting firms to do what was right, quote unquote, in China, knowing that irrespective of what they did, they would be attacked. So it was not like they were creating loopholes per se, but they were trying to deal with a culture in which the tax authorities would be adversarial as a first line of defense, which made them, and since they're very publicity conscious and reputational conscious, made them careful about what they could or could not do.
Thank you very much.
Anyone on the audience before I go back to a few questions on Slido? Okay. So Amadeo. Yeah. Does the OECD, because you,
Oh, no, this one.
that one has been answered.
The last one, probably.
So, so this is the last one now. Okay. Is there not the risk that the enhanced reliance on these epistemic nets give more power to the historically more powerful voices?
So I fully see the concern here, and I believe this is very important to answer this question for this reason. And I will answer with 2 points. The first point is that we see this enhancement as a defensive measure against unfair tax competition. So it would be counterintuitive to have defensive measures against tax competition, which is a state interest, and go at the same time and give at the same time power to these voices. And the second point instead is that I believe, and this is my belief, this is not expressed in the paper, that those historically powerful voices are already there, and they're probably already influential. So I believe that giving voice to epistemic nets is a way to enlarge the debate that is probably already full of the historically powerful voices. And then epistemics, we chose this expression because it refers to knowledge. So I believe that knowledge will be welcome anyways in this debate. Thank you.